Shares of Netflix soar after a rush of bullish notes from several brokerages. Eric Diton of the Wealth Alliance is here to tell us why. Eric, $1 trillion market cap by 2030, this company is saying it will achieve. Tell us the story.
That would be a wow because they're at 400 billion today. So we're talking about 2.5 times. First off, can they double sales in 5 years? Turns out they can. 2019 sales were 20 billion and they racked up 39 billion last year, basically a double. However, doubling off of that base of 39 billion, that is a tall task. Now, big question is, they've cemented their lead. We know that they are the streaming choice. What do tariffs do is a big question. Are they vulnerable? I think almost everyone is vulnerable. There is a digital service tax that they are charged now in foreign countries, 2 to 5%. Foreign countries could, in this war, increase that tax. However, it should be noted, 60% of Netflix titles are licensed by foreign countries. So they actually are very embedded in a lot of those countries. Now, we're all concerned about a recession. What does that mean to Netflix? Netflix is seen as recession resistant because if we're hurting, maybe we're not going out too much. What are we doing? We're sitting at home and watching TV. That's a win for Netflix. So can they do it? Time will tell. I think that's a very, very huge target. But regardless, certainly the momentum is in Netflix's favor, for sure.
Interesting that this news about Netflix's ambitious plans came out just a couple days before the company reports earnings on Thursday. So what do you think investors will be looking for in those earnings?
I think we want to see big revenue growth. Subscriber growth is a key metric, and Netflix has been crushing that. Ad spending is now over 2 billion. Want to see growth in that. And of course, global sales. A big part of their growth initiative is to get to 9 billion in global sales by 2030. So these are all metrics that people are going to want to watch. But if you ask me my gut feeling about the earnings, I am very bullish. I think they lose a lot of credibility to throw out a $1 trillion market cap and a doubling in sales and then come in with lousy earnings. So I'm going to go on the record and say I'm bullish.
Let's talk about earnings overall. The banks kicked it off, of course, with strong earnings, but they all gave warnings looking ahead. So is it really more about the outlook and even looking forward to Q2 earnings more than it is about looking backwards for Q1?
That's a great question, Lisa. I really don't care too much about these earnings. They are pre-tariff. We know the world is changing. One thing that is apparent is that the big banks are big winners when there's volatility. We've seen Bank of America, Goldman Sachs, trading revenue skyrocketing. And I don't think volatility is going away anytime soon. So that portion of revenue probably looks good for at least the next few quarters. But let's get down to it. If there's a recession, the banks are on the front lines. We've seen it time and time again. Credit quality deteriorates. All of a sudden, loans aren't being repaid. That's a direct hit. Another thing that's been happening too, there's been a bond market sell-off. And let's get back to what happened with First Republic Bank. We saw some bank failures because they're holding treasuries. And as rates rise, as treasuries decline, their core capital is declining. I'm not that concerned. I think the banks have perhaps changed their duration. But overall, it's really not about these earnings. It's about the next quarter and going forward.